Hi everyone, my name is Dustin Miles. I'm with Momentum Multifamily. I'm super excited to have Chutima here today. Chutima, if you would kind of introduce yourself, and then we'll take it from there.
Of course. Thank you so much for having me today. Hi, everyone. My name is Chutima Barrios, and I am a founder of Rental Capital. We invest in multifamily asset class in the US, and we like cash flow properties. So our focus is on cash flowing assets. Um, and we want to help our investors to get passive cash flow to achieve their financial freedom because that's how I started. I really I would love to share a little bit of my story on how I
Mm.
started investing in real estate because I have finance investments background, and like many other ordinary people out there, we would start from investing in stock market, right? If you want
Mm.
to invest in something, and I did that too. But then when I became a mom, and we found out that my daughter had food allergy,
Mm.
so we had to take her to do treatments. And the process took a long time. It was about 18 months
Oh
to treat
wow.
just one type of allergy. And she has a long
Wow.
list to go through.
Yeah.
And
Wow.
it costs a lot of money too. So the insurance doesn't cover it. And so basically it was almost $10,000 for just one time.
Wow. Wow.
So I was like, okay, we cannot just rely on W-2 income, even though it was good, but to maintain the lifestyle and look into the future, what's coming up, I was like, okay, I need more cash flow, need some backup plan or flexibility so that I can be there for my children, and still
Mm.
provide what they need, right? That's when I started looking into what kind of investments will give me enough cash flow uh, to serve that purpose. And
Yeah.
real estate became the answer for me. It was a tool for me.
Yeah.
And once I started, I didn't stop. So together, my husband and I, we kept buying one or two properties per year since
Hmm.
2017. And
Wow.
so over like about 6 years time frame, we had 33 doors, significant cash flow that allowed me to retire from the W-2. And so I started investing full time, doing rental capital in 2024. So that's the story on my journey on real estate investing.
Wow, that's great. That's awesome. And just so everyone that's listening knows, where are you located? What part of the country?
I live in Philadelphia, Pennsylvania.
Okay, cool. Okay. Yeah. Awesome. And then yeah, that's super cool to hear. I think, it's interesting because if you've gone to maybe not so much nowadays, but I remember when I first started going to a lot of different real estate events, it was they would flash up like you can have this Ferrari and you can have, all this, very luxurious things and all that. And I was like, I don't really care about that.
Yeah.
um, I like to take some trips. I'm usually honestly kind of frugal, on the trips, but like if there's something I'm super interested in, like I'll splurge. But I guess I'm just looking at what's the cost and the benefit to me. If I feel it's really worth it, cool. We'll splurge. But a lot of things I'm like, I don't care that much. And so anyways, but yeah, the whole Ferrari Lamborghini thing didn't really appeal to me as much. And that sounds like, to you, you were like,
Yeah.
I'm just trying to help. I want to provide for my kid and
Yeah.
be there for, just very, I don't want to say basic, but just it's just a parent.
Yeah.
So that's great. And that's really so the doors that you guys have are the 33 doors, and I don't know if you still have them all today or if you've sold any, but are those single family? Are they pretty close to you? Are they all over the country? What does that look like for you?
So those are multi-units building. So
Hmm.
duplex to quadplex. We actually have one 8 units building from that portfolio as well. And those are our personal capital. So we had not sold them because we just want to keep them. I mean, they're cash flowing really well because we
Yeah,
bought it before
yeah, yeah,
COVID. The
yeah.
market was good, right?
Mm-hmm.
Um,
Mm-hmm.
we didn't overpay. We have a
Yeah.
strong interest rate, good interest rate. So we just want to keep them and can pass them on to our children, which is different from what I'm doing at Rural Capital.
Right,
They're
right.
all in
Gotcha.
Philadelphia because we started from our backyard. We just want to be hands-on with the
Mm-hmm.
properties.
That's great. Just side note, kind of curious, because you did mention COVID. Did you end up refining a bunch of them during COVID when rates went down?
I refined a few. Yeah. I
Okay.
mean, because
Yeah.
some were kind of okay. Like we didn't get crazy interest rate anyway. So yeah.
Yeah. Yeah. I was just curious if you got,
Yep.
yeah, really low rates. So,
Yep. Yep. We did.
um, yeah, I'm about to move, and so anyway, and I live my house now. It's not. I'm in a really good neighborhood. I'm in really good schools, and so and I bought it during COVID, so I'm just gonna rent it out. And anyways, in my rates, below threes. So,
Yeah.
anyways, so that's awesome. Is so what so you started out in single family. How did you in it sounds like you've done some some kind of smaller scale multifamily, and then when did you kind of get into the syndication space, and did you go to any conferences? Did you join a mastermind? What did that kind of look like for you?
Yeah. So I actually joined Mastermind in 2022, just before the rate
Oh,
changed.
oh wow.
So when like people were doing all this rah-rah about acquiring multifamily in 2021,
Yeah.
and it was okay. Um, I was intrigued to learn so many people, my close friends and or whatnot, and so I feel like I need to extend my network
Mm-hmm.
in order to start doing multifamily acquisition. So I joined the mastermind, but then the rates changed right after. So that's why I didn't do anything from
Yeah.
that time until 2024.
Okay, that's yeah, and I mean, kind of looking back, it's smart you didn't. It's smart that you kind of like, wait a minute, big change, timeout.
Yeah.
What do we do here? And so very very smart and astute on your part. It's interesting because I was talking to we bought deals in 21, 22, and I remember there's a deal we bought in December of 21, and we bought a pretty low rate cap and all that good stuff. But I remember specifically because we were watching the Fed and all that, and I remember I think it was November or December of 21, and the Fed was like, we're not going to raise rates basically for the foreseeable future. And then it felt like a month or two later, they're like, we're going to raise rates. And I'm like,
Yep.
wait a minute,
They tricked you.
Yeah, yeah. So anyways, it's so funny. Because I'll have investors that are like, well, what happened? I'm like, our we didn't know the rates are going to go up, and then they went up a lot, and
Yep.
fortunately we've been able to kind of navigate stuff, but it's been challenging and all that. So, um. I guess so you got going in 24, and what is that have you done some syndication deals, and if so, what did your first one look like, and how did you get comfortable enough to I remember when I got into my first deal, I was more like I was pretty nervous. I mean, I was I was even friends with a guy, and but I was still nervous about handing over that much money to someone. Initially that was a lot, and so what that first deal look like, and all that for you?
My first deal, I partner with operator in Greenville, South Carolina, which I get to know him from my network, who
Hmm.
he referred me to get to know him because I was focusing on South Carolina and North Carolina markets. I kept asking around, like, who do you know in these
Yeah.
markets? Um, yeah, so and I think it was a great decision. Not only just like partnering with the operator who live there, be boots on the
Hmm.
ground, have years of experience. And also at the time, that deal, we bought it as new constructions. So we bought it off from the developer,
Oh,
which
wow,
like
cool.
many people don't really do that because if you
Hmm.
talk about in the industry in general, people like to do value add, outdated properties going in, renovate kitchen, bathroom, increase rent, right? So that business plan was really just buying it off, lease it up,
Hmm. Hmm.
low maintenance. And I say it was a great decision. I mean, we can always just look back and say whether it was a good or bad decision, right? And now that
Hmm.
I'm looking back, it was a good decision because that deal keep distributing cash flow to our investors every quarter. Um, so it was great. And yes, I was so nervous about it because that part I was bringing capital from my network to the team. So it was the
Hmm.
first time I raised capital. And for my background, I work in finance, so I work with Excel spreadsheet. So I'm not really extrovert. I don't have sales background. I
Yeah.
never
Yeah.
ask people for money. So it was quite a big shift for me.
Wow. Awesome. That's great. Yeah. And I remember, yeah, that first time raising capital, for me, it was interesting because other than I don't know. Most of the people, I still think some of my, friends are still skeptical. To be honest, I've done, almost, I guess, almost 20 deals now, but, and I don't know. Anyways, it's interesting. I've had, and it's all just so so I've had people on my list for probably 15 years, and some of those people are just now investing
Yeah.
after I remember a few of them might hit up on my first deal and they were very very skeptical. I don't know if it was because I drove a Toyota Corolla at the time, or they were like, oh, who's this guy, he's buying this multi-million dollar thing, he's driving a Corolla. So but anyways, I remember a few years later when we sold, they're like, oh man, I wish we would have gotten in with you there. But yeah, I mean it's a huge amount of trust, and and this is a lot of money. It's not just we're not even buying a $500 stock, or I mean even I mean I guess the 50,000 is a really pretty nice car. But in general, I mean this is a lot of money. I mean you could go buy at least a nice down payment on a house in a lot of areas, except for maybe New York City and in parts of California. But I mean it's a huge sum of money, and a lot of people, it takes them I mean, I don't know what the average salary is in the U.S., but I mean, for a lot of people, it probably takes them a year to build up, close to what they're investing at one time. So it's a lot of responsibility. How did that first raise with some of your network and all that? I guess obviously they trust you, but like, I'm sure some of them really want, especially if the finance background, they really want to dive into the numbers. And I guess, how did that kind of look for you? And then have you since been able to kind of get some of those people that were on the fence into, subsequent deals? Just curious about the capital raise on your side.
Yeah, so the first deal actually I didn't raise a lot because
Hmm.
it was the first time. It was still in the a lot of people were waiting on the sideline,
Hmm.
and
Hmm.
a lot of people got burned from 21, 22 deals that
Yeah. Yeah.
they don't have anymore, or like they don't
Hmm.
have trust in these investments anymore.
Yeah.
Um, so it was hard for me for the first deal, but yes, I do believe like those who invested with me, they did have a lot of trust in me because those are like people who ask me really few questions and I'm like, okay, cool, send me a check. Um, yeah, that was really that's the one thing that made me realize about like building trust with your
Hmm.
investors, right? And now I start doing more communication. and education content for to build trust with potential investors. So I do have like one and one of those investors now, she's repeating investing with me, which I'm really grateful for as well.
Mm. That's great. Yeah, I was talking to someone and they said there were three kind of I don't know how he phrased it, not levels of trust, but maybe circles of trust or anyways, but there's the trust in the person. Obviously, if you don't have that, then they're not even going to talk to you probably. But and then there's trust in kind of confidence in the location kind of area and all that, and then in the deal. And I like how he put it. He said the trust in the person is orders of magnitude more important than anything else.
Yeah.
And so pretty interesting there. um I guess are with your investors, do you do any sort of are you on go high level? Are you texting them? Are you calling them? Zoom calls? What does that kind of look like keeping up with your investors?
Yeah, my CRM is simple. I still use Cash for Portal, which is syndication platform, and they have CRM, so I just use it
Hmm.
to send emails. But eventually, it is about picking up phone call to
Yeah.
investors, like
Yeah.
especially when we have live deals.
Awesome.
Yeah.
Yeah, sounds good. And then Justin, I know you stressed at the very beginning cash flow, cash flow, cash flow. But in general, what does your kind of box look like for the type of deals that you look like? Obviously cash flow, big part, but do you have preferences on parts of the country or vintage or type of loan or sponsor? What does that kind of look like for you?
Yeah, actually, the number one is the sponsors, the operator that they would partner
Yeah.
with, that track records. And the track records means not just full cycle exit, but how long have they been investing in such market, right? Not like they're
Hmm.
jumping around everywhere in the country.
Yeah.
Do they
Yeah.
have in-depth the expertise and knowledge in the market?
Hmm.
If they had not done full cycle, that's fine. What's the track record so far? How's the property
Hmm.
performing comparing to their projection?
Hmm.
Um, and then if things went wrong, because sometimes people make mistakes, how did they deal with that problems and situation? How did they communicate with their investors or even their partners in the deal? Because I've heard some operators did a great job finding deals, but then they don't communicate with their partners. Yeah, so operators, sponsors are very important, the most important. And
Hmm.
then the markets I look at in the Sun Belt, but specifically I like Texas, South Carolina, North Carolina. Um, and within the, let's say, 2 hours drive from major metro.
Hmm.
Yeah, that would be if you talk about like, so where exactly of those states.
Yeah. Yeah. Yeah.
Yeah.
Yeah. Sounds
Um,
good.
yeah, so that's like the sponsors and the market.
Awesome. Yeah, all that makes a lot of sense for sure. Yeah, it's pretty it's interesting. Yeah, we've heard about some sponsors, and this is the exact opposite of what you want to do is if you start having issues you go quiet, and that's these are really big deals, and there's a lot of money at stake, and all that. And so I think it's really important to one, you probably can't over communicate. But then two, maybe like for us, I'm like, I don't have all the answers. I like, I don't know. I mean, I don't know if I should say this, or maybe it's embarrassing, maybe it's not, I don't know. But like, I don't know how to file an eviction, but
Mm.
I've got a lot of people that know how to do that, and they do that, usually, hopefully not on a monthly basis, but sometimes. And so, some people, what I think is just great about communicating in general when you do have issues, and then also, is leaning on your team. Like I don't have all the answers, but like I know a bunch of smart people who may have other ideas that, might be able to, help, clear the hurdle. So, yeah, it's, and then, you know, like we talked about, like if you bought a deal in 21, 22, your value went down 25 plus percent. And so you had to figure something out. And you got like four options. A few of them are not very good at all or terrible. And then, some are, not as bad. So, but yeah, it's interesting. And, I guess, on our end, like it was interesting too, because kind of through all the 2000 teens, you honestly, because I did my first deal in 2014. You didn't really have to operate. It
Hmm.
was rents just kept going up.
Yeah.
And when rents keep going up and cap rates go down and everything's kind of going for you, it's rising tide raises all ships, and it's easy to look like a rock star. It's a whole different thing when you have everything, for a little while it was kind of going against multifamily. I think those tides are shifting right now. Insurance has gotten really good, which is great. Taxes we're seeing kind of on the decline. We haven't really seen rents, start to really go up, but this leasing season is off to an early start and a very strong start initially on for our portfolio. So it's been interesting. Anyways, but I guess just in terms of so you kind of talked about locations and things like that. Are there, I guess, kind of some things that you've learned, or some things you're like, well, I learned from this, or I would do this instead of that, or just kind of lessons learned for kind of newer folks?
Yeah, so I have one portfolio that is in tertiary market. And
Mhm.
what I learned is the tertiary market means there are fewer populations, right?
Mhm.
Comparing to downtown metro.
Mhm.
Um, so when population move, I mean, sorry, when the tenants move out, it takes longer to find new
Mhm.
tenants.
Mm.
So that's the one thing that I learned from this investment. And I mean, we work hard, we work with property manager, do the listing and all that, but it's just that the market dynamic is different. Yeah.
Yeah.
So
Yeah.
if you want to invest in smaller cities, smaller towns, so just give some buffer in your underwriting for the turnover.
Gotcha. Yeah. Yeah. I've invested in kind of tertiary markets before, and one thing that we've had issues with is the labor. There's just not, it's a decent sized town. One of them there's two of them I'm thinking. One of them's Waco in Texas, the other one's Abilene, Texas. Both of them have about 100,000 people or so, and but sometimes maintenance guys can be a challenge. A new manager or leasing agents, because there's only so many apartments and in each of these. And so anyways, so that for us, we found that to be a little bit of a challenge. Or some of the vendors we had to pull in from larger metros, had to to get a little better pricing and all that. But so there's some challenges for sure. So um, awesome. Are there I guess would love to hear about your goals for this year, and then kind of the best way for people to get a hold of you.
Yeah. This year, I do believe that the market is picking up or going into the recovery phase. So I'm excited to get more opportunities in this deal. And the market I'm looking at is Dallas Fort Worth. Because again, I like Texas, it's growing. Like the macro theme is
Mhm.
there, right? We just need to find the opportunities and understand like the supply demand dynamics. Um, and Dallas is one that I believe demand is there.
Hmm.
It just takes time to absorb all the new supply that came in.
Yeah,
But
yeah.
otherwise, like financial economics terms is phenomenal. Um, so that's what I'm looking forward to have more properties in Dallas and also continue finding deals in North Carolina, South Carolina. So for everyone who wants to get reach out to me, have a contact with me, you can follow me on LinkedIn. I'm most active there. I post articles, knowledge behind the scene, learnings that you can learn about multifamily investment. And it's just my name, Chutima Barrios on LinkedIn.
Awesome. Yeah, great. And I was going to mention I love the name of your company and your logo and all that, by the way. So
Thank you.
um well, cool. Well, yeah, please, everyone reach out to her, and she super nice and super knowledgeable, and yeah, but appreciate your time and look forward to chatting more, and hope you have a great Wednesday.
Thank you so much.
Thank you. Take care.